if a very large firm were to acquire or sell a very large inventory of assets. Now that would spook the market if it was all done on the blockchain, on a decentralized exchange, on a centralized venue. But in a dark pool, this wouldn't happen nearly to the extent that it would on lit exchanges because the transaction would be concealed from the market.
Break the cycle of exploitation, break down the barriers to truth, break into the next generation of privacy, break free. Free to scroll without being monetized, free from censorship, freedom without fear. We deserve more when it comes to privacy. Experience the next generation of blockchain that is private and inclusive by design. Break free with Midnight. Visit midnight.network/break-free. Looking for a faster, cheaper way to move money worldwide? Owlting, now listed on the NASDAQ under the ticker symbol OWLS, is building the rails for stablecoin payments. Convert fiat to stablecoins and send money as easily as a text message. Learn more at owlting.com. CoinDesk Bitcoin Treasury Month is brought to you by Genius Group, a Bitcoin treasury company listed on the New York Stock Exchange under the ticker GNS. Genius is building toward a 10,000 Bitcoin treasury and just launched Genius Academy, featuring courses from Saifedean Ammous and more. Start learning for free today at geniusacademy.ai. Genius Group. Genius isn't measured in IQ, it's measured in Bitcoin. Hey everyone, you're watching Markets Outlook on CoinDesk. I'm Jen Sanasie here with my co-host Andy Baehr. Our guest today is Denis Dariotis, the founder and CEO of GoQuant. Hey Denis.
Hi Jen, thank you for having me.
Thank you for joining us. We got to start out talking about what's happening in the markets today. Bitcoin has broken that psychological $100,000 level. Talk to me about what you're watching and how you're interpreting that.
Of course. So, of course, it's a big event. Everyone, especially towards Q4, is having this end of year bullishness, expecting it to break the 150 or 125 highs previously. But this is really a turn of events. And I think a large part of this is due to a cooling off period after the liquidation events about a month ago. And the other part could be due to some of the expectations with the Fed and geopolitical tensions.
It's fair to say, with equity markets behaving also quite poorly today, that this is a general risk-off thing, not crypto specific, although new crypto adopters tend to think of any kind of drawdown in crypto prices as being the end of the asset class, whereas in equities, everybody knows equities will still be here when the sun rises. Do you think the asset class has matured enough that people can think of this as a pullback and not abandon the idea of Bitcoin and growth crypto assets being successful over the long term?
Absolutely. I think at the end of the day, all assets are correlated. So whether you're trading a certain equity in another jurisdiction, ultimately that is going to have a certain correlation to Bitcoin and any other altcoins that exist. But that being said, I do think that the crypto market as a whole has gotten to a much larger point of maturity where some assets are not entirely correlated from each other, and the equity markets aren't always completely correlated with the crypto market. So I don't necessarily think that everyone in the market is going to be abandoning crypto, especially with the recent regulatory advancements, with the crypto optimism that exists amongst the institutions.
All right, we're talking about GoQuant now, and I know you founded this company at just 17 years old. Now you're launching GoDark. This is backed by giants like Copper and GSR. Let's level set. Talk to us a little bit about GoQuant, and then we'll get to GoDark.
Sure. So GoQuant is a trading infrastructure provider. So we provide market data, trade execution systems, risk, portfolio management systems, and more recently, dark pools and credit platforms. So ultimately, we're really looking to be at the center of this facilitation of institutional liquidity. So essentially what that means is delivering services and products across that entire life cycle of the trade. So going from market data, pre-trade, actually the trading, post-trade, risk and reporting, and doing that entire life cycle effectively and performatively is something that is very apparent to have a need for in the crypto space, especially with this fragmentation of liquidity. So as we all know, there are the same symbols, the same instruments available to trade across OTC desks, centralized exchanges, decentralized exchanges, and then in the traditional markets with these crypto ETFs and treasury companies. But in terms of piecing it all together in one efficient manner, especially from an institutional perspective, that's where it becomes even more important to get better execution than what the current status quo is.
Looking for a faster, cheaper way to move money worldwide? Owlting, now listed on the NASDAQ under the ticker symbol OWLS, is building the rails for stablecoin payments. With OwlPay, you can seamlessly convert fiat currency to stablecoins, send money as easily as a text message, and on or off ramp globally. Learn more about Owlting at owlting.com. CoinDesk Bitcoin Treasury Month is brought to you by Genius Group, a Bitcoin treasury company listed on the New York Stock Exchange under the ticker GNS. Genius is on its way to hodling 10,000 Bitcoin in its treasury while educating the world on a Bitcoin-first future. Genius has launched the Genius Academy with courses from the likes of Saifedean Ammous, author of the Bitcoin Standard, Natalie Brunell, and many more. Start your Genius learning journey for free today at geniusacademy.ai and earn Bitcoin-backed gems. Genius Group. Genius isn't measured in IQ, it's measured in Bitcoin. We're going to focus on GoDark on this episode. And I got to ask you, retail viewers are probably sitting at home. They're hearing dark pool and they're thinking about some nefarious actions going on. Talk to us about what a dark pool is so we can just lay a foundation for the rest of our conversation here.
Of course. So drawing contrast to public, what are called lit exchanges, so the New York Stock Exchange, the NASDAQ, Binance, OKX, all these exchanges have one thing in common, which is that the order books and the actual trades that are filled are all public. So they're available with public market data streams, and even once they're actually transacted, they're public via the trades feeds. And in the case of decentralized exchanges, they're all visible on chain. Now, those are all the parallels in the lit exchanges where all the trades are visible. On dark pools, it's more of an OTC-like relationship where the order books are entirely concealed and the counterparties who are trading don't know which counterparty is on the other side of that transaction. And this is really good from an institutional perspective because it facilitates the reduction of market impact for trades. It reduces information leakage on performance strategies, and it doesn't allow institutions to tip their hand to the market. Now, an example of this is if a very large firm were to acquire or sell a very large inventory of assets, now that would spook the market if it was all done on the blockchain, on a decentralized exchange, on a centralized venue. But in a dark pool, this wouldn't happen nearly to the extent that it would on lit exchanges because the transaction would be concealed from the market. So essentially what we've done here by building GoDark is we've partnered with one of the best custodians in the space, one of the best liquidity providers in the digital asset space. And with GoQuant, we basically built tech platform and the tech layer to piece all of this together.
So the dark pools are, despite the name, which almost seems to want to attract negative attention, I don't know, maybe they could have been named better because of how useful they are for institutional trading in asset classes like equities. When you were developing this, did you find that the users you were trying to pursue or the partners you were trying to pursue were familiar users of, let's say, equity dark pools, and they were saying, wouldn't it be great if we had one of these in crypto? Or did you have to sort of unveil the whole value proposition for people who may not have had equity dark pool trading experience?
The firms we've been discussing with have been entirely used to the fact of dark pools being existent in the equity markets and other traditional markets. And a lot of firms might not know this, or especially some of the retail crowd might not be aware that over half of US equities volume is done in dark pools. And that is for that reason of market impact, information leakage, and tipping firms' hand to the market. So this is apparent in equity markets and to our client base. So this was a very high demand to our user base to basically say, well, why isn't there an institutional dark pool in the crypto markets? And a lot of firms were affiliating dark pools with decentralized exchanges in a way, but that is not entirely the same product at all, because a lot of these on-chain transactions are completely transparent and work against the interests of those institutions, especially while executing these large block trades.
So help tease out one kind of maybe potentially nerdy detail here. Even in equity dark pools, even if liquidity is discovered and exchanged inside a pool, that transaction is still going to be put up on the tape, right? That's going to be recognized in the consolidated volume of equities trading at some point, right? It's going to have to cross somewhere and be recorded. In a GoDark dark pool, if somebody is looking at all the volume on a certain name across centralized exchanges, but a transaction happens in GoDark, it doesn't necessarily, there's no regulatory requirement or conventional requirement for it to print on that centralized exchange. So that volume actually isn't seen, right? Isn't recorded by those who are kind of like, some of our businesses that are recording centralized exchanges. So does this suggest that there may be more and more latent spot volume happening in crypto, much broader than what's seen on centralized exchanges?
There definitely is a possibility of that. And because of this price discrepancy between what may exist in a dark pool versus a transparent lit venue, that efficiency of information will be arbitraged out a lot slower than it would have on any other lit exchange. So from an institutional perspective, that does provide more opportunity for trading the arbitrage out of these markets, but it is necessary to really execute these large block trades in an efficient manner.
Yeah, no, that's super important. And then institutions will find that they have to find a way to have access to these pools that are large, or else they not only miss the information, but they'll miss the liquidity. How broad is the coverage in dark pool right now? How many tokens do you get through, and where do you see that changing over the next year?
Currently, the coverage is about 25 spot tokens, but that will be evolving over the next year as volumes increase and counterparties are onboarded. So we see that evolving into perpetual futures, calendar futures, options, and other instruments. And the possibilities are truly endless, especially when pairing together institutional grade custody and really quality liquidity providers. So because this is a very unique venue in crypto that has not been done before, it's going to be an area where we can attract a lot of interest and start to list more instruments to trade.
Denis, thank you so much for joining Andy and I. It was a pleasure having you on the show.
Thank you both.
Thanks.